TGIF Warriors, how's everyone doing? I'll show you how exhausted I am. I'm glad it's Friday. How about you guys? You glad? Hi, Dave, Patrick. So, NFP Friday too. So let me just show you how I look on a Friday. And I'll tell you, it's been a long week. Let's react to the reaction in the NFP today. Hi, Kurt. So here's a couple best guesses. I'm inclined to fade strength or fade weakness. Oh, thank you, Dave. So I think you could do either, but I guess my preferred scenario, because the dollar is so extended here now, and we're starting to get a lot of non-confirmations. Here's the Euro 1 hour. The 1 hour has been diverging for a while, but it's possible we even get a 4-hour non-confirmation if we take out this low and it doesn't stick. Pound's a little weaker, but the pound looks okay on the 1 hour for a bounce. See, been diverging for a while, a lot of non-confirmations here. So if they hit it initially on a stronger than expected NFP, there might be a long scalp. And then you could, remember what got you there. And I don't think anyone in face got caught long the end this week. I think a lot of people probably cashed in on the short from the upper 109s to 110. So actually, if the dollar makes a new high, we probably get a lower high in US dollar yen. So some type of fib retracement between 940 comes in up here. Yeah, a lot between 930, 940. I think we could go to 840, and then under 840, the yen has shifted, and I will declare this bounce from 104.5 or so, 104.80. I forgot the exact low, but we liked it down here on the 3 drive. Back under 108.40, I'll declare this as a bear market rally, but we still need to close back under here, 830, 840. So that's about it. That's what I have. I think we're going to have an interview with a crypto guy who launched a Star Wars ICO. Star Wars, I'm not kidding. Star Wars, nothing but Star Wars. Anyone remember?
Dale.
Huh?
Dale.
Yeah. What?
Dale. Today is May the 4th be with you day, just so you know.
Yeah, that's what he wrote.
Yeah, May the 4th be with you. All right.
Thank you. All right.
I'll let you continue on. All right.
No, it's all right. May the 4th be with everyone hearing our voices today, Blake. And, what are you thinking here into the NFP? I, pretty much have provided my guesses.
When you said fade strength, I would as well. I was reading a analysis from Deutsche Bank just a little while ago, and they feel that the euro, the fall has been kind of overdone, if you will. There's still a lot of overarching issues with the dollar, and if you remember, like the last couple of months, I had been very skeptical about the euro up where it's at. I've been very skeptical about the dollar being where it was at, and I was expecting a bounce in the dollar, a pullback in the euro. Well, we've gotten it, and we got it in a pretty big way. And I don't know if today is the low for the euro, but I am now starting to search for levels to see where the euro is going to find its footing. I do believe the dollar is showing some weakness against the yen, and by the way, I had a great, for me, it was well, I say my best day of the month, and it was, but it was actually one of my better days of the year yesterday. So
wow, great, man.
yeah, I was aggressively short the dollar yen yesterday from 109.70 ish, and I closed a majority of it at 109.12 or 109.10 or 109.08, somewhere around there, and I made very good money. So and I shorted again overnight, just above the figure, closed it just a little while ago, just scalping into the short side. And I think the dollar yen, as you pointed out, which I 100% agree with you, the move, if we close the week down at 108.50, you know, I think it's going to be a very, very bearish event for the yen, and I would not want to be long. I think that the dollar yen could very easily see, you know, 107 again, if not lower. The moves that we're seeing in the bond market are very, very scary for anybody who is long dollar yen. Now we really preyed on the idea, and let me go ahead and take over the charts here.
Okay, buddy.
But
I was curious, before we get too far off track, that report you read from, what was it, Deutsche Bank? Did they
Deutsche
mention?
Bank.
Yeah, did they mention any levels of interest for buying the euro?
No,
okay.
but I can, because I was taking a look at, no, if you use ForexAnalytix, you already know why we stopped where we stopped. This, and matter of fact, if you're listening here yesterday, you know exactly why we stopped while we stopped. Let me grab a pen. Okay, this confluence right here is the 618 retracement of this move. Okay. Yeah. And 161% extension of this low right here to this high, or you know, basically the consolidation. So that's why we found support. Now we have our rallies, and you're looking at the daily chart, right? This is the daily chart. The rallies are capped by the 200-day moving average right now. So whether we break below here or break above here has more to do with non-farm payroll, and that's the exact analysis that I gave you guys last night. If you use ForexAnalytix, we are going to move out of this box based on non-farm payroll. Now, I don't know if this is it. I'm not 100% convinced that this is it. I wouldn't be surprised if we did this over the next week. I wouldn't be surprised at all. That wouldn't surprise me at all. But I'm curious to know if we're going to get down here or not. Now, the reason why I circle this area down here is because let me go back to, whoops. Okay, if you take, let's zoom out a little bit more. Okay, take this fib all the way to the lows. Okay, 38% retracement comes in, and let me get rid of this. We don't need that now.
117-ish.
117.
That's kind of what Jim Welch was looking for. That he actually was right on top of it and wrote it down. But I think that's his target, 17 to 16 and a half. In there. Yeah, so I wouldn't be surprised if we get down there either. So, but you know the point I'm trying to make here, Dale, in all actuality, is what's your edge right now at this very moment in time? Do you have an edge? And is it good risk reward to be long? Is it good risk reward to be short? I don't really. I think feels like to be short. Yeah, I think that the argument to start buying down here is there, as long as we can hold above 119. Let's just call it these lows right here, 119.30. I think you could take on risk and take a punt and say, I'm going to be long euro, and if it breaks below 119.30, I'm getting out no matter what.
You got daily RSIs that are oversold, but I'm not, like I said, I'm not 100% convinced that this is over yet. Now, do I think that the dollar yen has peaked? I do, and therefore I want to be short the dollar yen as a result. Why do I feel that the dollar yen has peaked? Well, and here's that weekly candle that I was just mentioning. And again, like I told you yesterday, I think we had to redraw this trend line. Trend lines aren't perfect, and I'm definitely not perfect in drawing them. And I make adjustments all the time, because you have to see what the market's looking at versus what you think the market's looking at. And what I told you guys yesterday before Jim Rickards came on, or before Steve took over, and then Jim came on later in the show, is that I drew the trend line through the bodies of the candles, and the bottom end of the candles here, and then the peak, and that took us to 110, which is also 161% extension of this move, and that has capped the dollar yen. So my feelings at this moment in time are, as long as we stay below 110 in the dollar yen, I am now shorting it.
I agree. Yeah,
Okay.
and you showed that candle the day before yesterday that this could happen when
Yes.
when it looked great at 110.
Yes, and that was that was the risk. And obviously there's a lot of people now that are stuck along, and you have to imagine we've had several weeks, 6 weeks of steady rally from 105 to 110. So to see it reverse, if we close down here or lower, that's an ugly gravestone doji. That can be an ugly shooting star. If we close down at 108.50, it's going to be downright ugly, and people are going to start liquidating that thing first thing Monday morning, more than likely, if we close on the lows. Now, are we guaranteed to do that? No, it's non-farm payroll. Anything can happen. It's a freaking lottery today, but it is possible. Now, one other the other piece of the pie, or the puzzle, not pie. I'd like to have some pie. Actually, pie doesn't sound so bad right now, with a little bit of topped with a little bit of ice cream. I know it's only 5 o'clock in the morning here, but I don't care. That sounds great. Anyway, the other piece of the puzzle here is the bond market, and I tweeted this out yesterday. You guys already know about it, but I'm going to go ahead and talk about it again. This is the most aggressive short position in the market right now. Just like the euro in the Forex market was the most heavily weighted long position in the FX market, in the futures market, one of the most, if not the most biggest position short right now is in the bond market. So bonds are already breaking past this previous resistance. We're in a descending wedge. I think the bond market could squeeze the crap out of everybody. And then what happens? If the bond market squeezes, that means that bonds are going higher, yields are going up. That was one of the notes that it's interesting. Deutsche Bank made a note on bonds, or was it Deutsche? Maybe it was Citigroup. I've read a few research reports this morning already, an hour ago. So
yeah, I had to get 1 million of them from Paulie, and I just couldn't absorb it all.
Well, I try to read as much as I can, when I get up, and it's, because there's nothing better than reading a bank research report at 3:30 in the morning. It's like I'd rather sometimes I feel like I'd rather just rip the eyeballs out of my sockets, but I try to do that, and I try to do it every morning, and this morning I was reading, I think it was Citigroup actually that was noting about bonds, and they were looking at yields and saying that if yields drop below 293, which we're at 293 right now, they think that we can move back down to 280, and I agree with that. So and you guys know I've been talking about the bond market for the last couple of days, and so that means that if bonds squeeze here, we could really start to rally. And if bonds rally, yields drop, the dollar yen could be trading at 107, 106, no questions asked, not even a blink of an eye, we could be right back down here. And so I think that if you're you know, long the dollar yen, you're very aware that yields have the potential to move lower, and that could greatly affect what happens with the yen. Like I said, the yen is not a stock market story. It is a bond market story, but that doesn't mean it can't be a stock market story. You know, you look at stocks, Dale, and this was really surprising yesterday. I saw this hammer on Wednesday. Is the S&P, right? Or is it? We saw this hammer on Tuesday. Sorry.
Yeah.
Tuesday, the market reversed and we broke, you know, below this trend line. Yesterday, we broke below the 200-day moving average. We got this hammer again. Now, hammers are bullish. These are bullish candles right here. You know, this is bullish.
Yeah.
This is bullish.
No follow through.
No follow through on Wednesday, and here we are today. It's already looking kind of ugly. Look, if we close the week down here, you know, down here, yeah, that's going to really freak people out, because the one thing about the market is the market, and just like the behavior, we're like Pavlov's dog, you know, behavior in the market. Oh, we're gapping down. Let's go ahead and buy the gap. Oh, we got a hammer candle. That's bullish. Let's go ahead and get long tomorrow. You know, when the behavior of the market changes, that's when you start really screwing things up. As far as, you know, once that behavior changes, it really starts screwing things up from a trading standpoint, because now you get buyers that say, you know, I keep buying here on these dips. I keep buying when I see a hammer, and I keep getting my ass handed to me. It's like, oh, I stuck my hand in the fire the last 3 days, and it hurts actually. So I'm going to stop sticking my hand in the fire, or I'm going to stop.
Big change of behavior from last year in January. So yeah, the character of the market has changed. You're right. You know, we've had some great earnings, record earnings by some companies, and the averages aren't responding like they would have last year.
Yeah. So you know, the risk here is that you know, we are in a situation where the market could find itself in a little bit of a pickle, especially if we close lower. Now, again, I was going back to the yen. The dollar yen may not be a stock market story right now, but it could turn into one. So if bonds rally, bonds might be rallying because of a squeeze, and it's like a domino effect, right? Because you get the bond market rallying because it's everybody's positioned poorly. So now you got everybody getting squeezed out of the bond market where bonds rally. People in the stock market look at the bond market and they go, wait, what do the bond market traders know that I don't know? And are they buying stocks because it's risk off? The S&P is only down like 1 or 2 points. I better get out now. So now everybody starts getting out of stocks, and now you got that one domino that fell, which is the bond market, that bleeds over to the stock market, and the stock market starts to fall. Then the yen starts to really pick up steam, and now you got the dollar yen trading at 108 really quickly, and you go, whoa, how the hell did that happen? The numbers weren't even that bad, you know. So you know that happens to people all the time when you go oh wow, you know, great earnings in the stock market, in this one stock XYZ, great earnings. Their forward guidance was great, and their subscriber growth was great. And why is the stock down 5%? It's because you know, a domino effect hit it, and it more, you know, behavior of the market, you know, fed into it. And so anyway, I'm obviously looking at the dollar yen as being a short, and if we break below this 108.60 level right here, 108.50, I think it's lights out for the dollar yen. I think we could trade down at 107, 106 going into the next you know, week or two. So and again, going back to the euro, I don't know where the bottom's at in the euro, but I wouldn't be surprised if we bounce from here. I wouldn't. And we've corrected a lot of this, you know, aggressive buying that we've seen. I'm going to be very interested to see what the CFTC positioning says.
Yeah.
Today in the euro, and I'm gonna make the assumption that positioning is a lot more neutral, especially if you take Tuesday, where the market got obliterated in the euro. I would think that speculative positioning has evened out quite a bit, and I'm going to reiterate things that I've told you for the last 2 months. I'm not a dollar bull longer term. I was a dollar bull near term. We got the dollar rally that I'd been looking for the last few weeks, several weeks, 4 or 5 weeks. I've been looking for this dollar rally. We got it. Is it over now? I'm not sure, but I am a little skeptical about being bullish the dollar at these prices. We've made a lot of ground in the last 2 weeks, but the flip side is, and let me take a step back on like the dollar Swiss, for example. I look at the dollar Swiss. Some of the structure of these dollar pairs, some of these dollar pairs actually look pretty good, and I look at the dollar Swiss and I go, man, yeah, if this dollar Swiss can come back to like 97.50, this would be a gift down here to be long. I think if we get a dip that looks like this, I think this would be a gift to be long. I just don't know if this is going to be that the dollar Swiss has completely turned the corner. But I look at some of these pairs and they look good, and I look at the pound. The pound looks like it is going lower. I mean, we could bounce from the 200-day moving average, which we're at right now, but any rally to 137, I think, is going to be a gift to be on the short side. So, I'm not 100% convinced that the dollar is ready to pull back and start resuming its longer-term trend lows either. So, really quick, let's talk about today. So today, this is just intraday. I think you can start by doing this. Okay, you can start by doing this if you guys want to look for breakout points in the euro. Take your hourly chart and draw it like me. I think I know where the euro reverses above 120.
Yeah.
And it probably shows a reversal below, start getting below 109.50. We got a downtrend resuming. I think that's pretty easy. The cable, keep in mind the cable's on the 200-day moving average. You can probably take the pound and go like this. Yeah. It's got a bearish wedge, so you kind of know where the breakout point is. Dollar yen. I mean, the dollar yen's weak, but dollar yen breaks below this 108.60. It's things in trouble. And even if we rally here back to 109.50, I'd be a seller.
Yeah.
Right there.
Right. I mean, that is your weak sister. So the other things we're talking about don't have higher lows or lower highs. The yen does.
Yeah. Right. Exactly. So I think there's you got like the Aussie. We potentially false breakdown here. I still think the Aussie could rally to like 76 cents. I'm not sure what to do with the Aussie and the Kiwi at this point. This is 161% extension, but again, I'm not really too sure what to do with it. Dollar Canadian, I'm not even touching it. I did trade it this week. I actually did short it at some point this week up here in the 70s, and I closed it like in the 40s. I've been trading in this range, but knowing, well and good that we're in a range. And, we don't have Canadian employment data today. Canadian employment is going to be next week. So we do have IVPMI, but, the Canadian's going to be, I think we're still waiting for NAFTA. Peso actually looks really well bid. This is maybe in fears that the NAFTA deal doesn't go through, or maybe there's some risk aversion, so emerging market currencies are under a little bit of pressure. But the US dollar, Mexican peso, I'm not trading it right now. but it doesn't look bearish, you know. The U.S. dollar Norwegian krona. I know Stelios put in a pattern play, and you know, hey, as long as this thing stays below the 618 here, you know, the U.S. dollar Norwegian krona looks like it can come back down. U.S. dollar Swedish krona is pretty bullish, but you know, we've had some great gains. I would be more than happy to buy this thing back down here. You know, if we see some dollar weakness, I'd love to buy the U.S. dollar Swedish krona back at 850 if I can get it, and hopefully, you know, the dollar will weaken a little bit and give us an opportunity to buy the dollar a little cheaper. But I'm pretty open to whatever I see here in the next few minutes. So, but keep in mind, I would like to sell like a dollar rally if we get it, at least for today. So. With that being said, I'm going to pass it over to my colleague, Scuba Steve.
Hey, Blake. Good morning, mate.
Good morning, Scuba Steve. Scuba Steve. Scuba Steve. Yeah, you have to see Big Daddy to know what I'm talking about. So.
Okay. I think
vintage, yeah, you have to. It's a funny movie, and considering your name is Steve and. Scuba Steve is all right. Anyway, it's Friday. I'm so tired today, and I have family coming in town, which we're hosting. So I don't know how I'm going to make it through it tonight, but I'm going to try. I got to make it through the next few minutes. So good luck today.
TGIF, and good luck to you, mate, as well.
Thanks. Yeah, good luck to everybody out there. TGIF, and hope you have a great May the 4th be with you day, and then tomorrow. Yes,
Blake, I think we should also tell people about Joe tonight, right? You wanna say that?
Why don't you say it, because I gotta trade. So
okay.
Go ahead. All right.
Okay.
All right, you guys. Thank you, Dale. Thanks, Steve.
Okay. Nice. We obviously have very important data coming out in 2.5 minutes. We will be monitoring USD yen. Let me very briefly say that the vast majority of the major pairs, obviously not coincidentally, are currently near or at very important supports and resistances. For example, if we do see, let me say that the market expects roughly 190K from NFPs. Stelio, by the way, you're here with us, right? So we can cover the data when they come out.
Yes, sir, I'm here, of course.
Okay, perfect. So we expect roughly 190K, which is also the the medium-term average on NFPs. So the market expects more or less the trend to remain strong, having to do with jobs. We expect a 4% unemployment to be exact, and the previous print on participation rate, if I remember right, was 62.9, something like that, right?
62.9. We're also expecting a slight drop on average hourly earnings, which I think ticked up last month, and it's kind of expected to tick down this month. I mean, it's details. So let's see where those come in.
Yeah. So Euro USD on the 61.8 fib. Cable is riding the 200 DMA. They both look very heavy. Aussie, mounted a rebound from the 75 cent area. We said how important it is, but let's be honest, it still doesn't look bullish. We need to see some follow through today. Kiwi, more or less from a confluence of supports, rebounded. USD yen is almost down to retest this ascending trend line, this ascending channels support. Bottom line, if we do have a strong NFP print and we do see the DXY continuing to the upside, I think we should finally see the DXY close above the 92.60 area, and that's going to be a major development. If we get a weekly close above that, I think then we can be even looking for a stronger rebound. But as I said, that doesn't mean that the initial reaction is what we care about. It is how we end up closing the week, right? So definitely several instruments. Also, S&P once again testing the 200 DMA. We managed to hold it once again yesterday. We've made several attempts. We might see the catalyst of a move to the downside finally. Depends on what we get. So I think that the next few minutes are going to be quite important.
164 is weak. Average hourly earnings down to 0.1%, so less than expected, and unemployment ticks down, but participation rate also ticked down. So overall, I think
unemployment down to 3.9%. 3.9%. We're at the 3-digit number. Okay. So everything actually is below expectations. Everything. I know that the nominal unemployment number is stronger, but as you said, Stelio, that's purely due to further decrease in participation rate. Irrespective, I mean, the unemployment remains, at historic lows, and we see here the USD weakening somewhat. USD yen is pushing towards the 108.50 is going to be the first area of support. 108. Afterwards, I do believe that if we close below that, we can be more confident that this was a corrective move to the upside that's over, and we might be seeing resumption to the downside. Let's see how risk actually, if we judge from the S&P, which is considered the risk barometer, the market is undecided of how it wants to interpret this data having to do with stocks. I mean, we still have a very, very small candle for the day. We're still holding the 200 DMA, so the market's still undecided about that. We do see the USD, the Euro USD rebounding. Same with the cable, but very, very small moves so far. We're seeing crude making an attempt, which was expected. I mean, if we saw USD weakening, the crude.
Lost you.
Yeah, he actually uninstalled and reinstalled the software, and it's still doing it. So unfortunately, that didn't work, Steve.
What a great play-by-play.
Yeah.
Crude was already testing a penance.
You
okay,
are back now.
Can you hear me now, Stelio?
Yes, you're back now. Sorry.
Okay, I've really, so I've really tried everything. I don't know what else to try, mate.
Okay, so you do a great play-by-play, man. You could be a sports announcer or a racetrack.
Steve, there is one solution. You could come to my house every day on the webinar. We could do it from here.
Or we could rent a place where I could live and work out of in between you guys.
Good idea.
Sounds like a plan. Crude is about to break out. We were saying yesterday. How likely it is that if we see USD weakening, we might finally see one final thrust towards the 72 area. I think that we might get that happening today. Let's have a look at the USD NOK. USD NOK, we got a nice rejection, but for me to get confirmation that we're going to be moving lower once again, I
Damn, it's looking worse now. We lost you again, Steve.
Hello,
the round level, which is 8.
Okay, you're back now, Steve. Well, we lost him again. We can hear you, but very, very low volume.
Yeah, I just changed the microphone.
Okay,
it should be okay. It should be okay soon. I just completely changed my headset, and let's see if that makes any difference. Although I doubt it's the headset, but I've tried everything else, so whatever. So, Aussie is still holding, Kiwi is still holding. We still don't see any follow-through actually for the market. I mean, the market doesn't seem determined to make the next move. Yes, the data was somewhat bearish, the dollar, but in all actuality, we don't see the dollar weakening really that much yet. So let's give the market a few minutes to digest this information and see if we're going to get any kind of a follow-through. Until then, my eyes are still locked on USD yen. As I said, this is quite an important channel. And let's go back to the DXY. I think that this might be one more reason why we should expect that this 92.60, 92.70 area might be holding for today as well. For me, this is the ultimate bull bear line here. So on the other hand, I have to say that 91 was a very important level. If we see a move back at 91, you know, I would be very interested to see what kind of a move that would be. So if I do see a move to 91 and that move looks corrective, then I'm going to be expecting, you know, at least one more leg higher for the dollar to complete some kind of a correction that might take us up to 94, 94.50. On the other hand, if we do see a decisive close above 92.60 one of the following days, I'm perhaps going to be looking for higher targets, perhaps 96, which is the 50% fib from the high that we got at the very, very beginning of last year. Perhaps even we have a horizontal level of support resistance a little bit higher, 96.40. So these are the levels I'm monitoring for the DXY. Did we get any other data, Stelio? Did we have any revisions? Because I wasn't looking at revisions.
Actually, let me see. Non-farm payrolls were revised slightly higher. Revisions,
okay.
yeah, nothing else though. And average hourly earnings were actually revised down to 0.2 from
from the last print. Okay.
Yeah. So basically, revisions were really not a non-event.
Okay, revisions are non-event and weak data today. Although I have to say, even though today's NFPs are, you know, weaker than expected, we obviously have to acknowledge that employment data on average, because, you know, a single month doesn't say much, especially when we know that this month's data can easily be revised next month to 190, for example, which is exactly what the market expected, right? We've seen that happen multiple times, getting revisions of 20, even 30, even 40. Okay, so overall, the employment data remain strong, and perhaps the fact that the nominal unemployment number has now fallen to, you know, a 3-digit number, 3.9, might be having a psychological influence to the market, because, you know, 3.9% unemployment is considered, you know, in practice like full employment. So this might be keeping the market's hopes high, you know, that this will eventually finally manifest in some kind of inflation, which is anyhow the whole thesis about expecting the dollar to strengthen for people that are expecting the dollar to strengthen. Right, Stelio?
Yeah, absolutely. Although I must say you're right about this thing about it dropping below 4%, but really 3.5%, 4%, 4.5%. It's, you know, I know it's not the same, but really it's very, very good employment, and it's almost like, you know, frictional unemployment is considered to be what, 2.5%, 3%, I think. So it's almost full employment. So
yeah, it's almost full employment. Correct.
Yeah,
correct. Although the qualitative data of employment are not, you know, the greatest they could have been, but to be very honest, you know, that's not exception in the US. I mean, this is more or less nowadays a rule, you know, everywhere on the developed world, right?
Absolutely, absolutely. But overall in the US, you know, the nominal unemployment rate is excellent, and, you know, 0.1, 0.2 either way is not going to change anything in my view.
Yeah, that is absolutely correct. So far the market remains numb. I mean, more or less everything is exactly where it was before we got the data. So far the market does not seem to be, I mean, especially dollar bulls do not seem to be, you know, pushed away from trying to beat the dollar from this specific NFP print. So in all honesty, the more time passes by and we don't see dollar weakening, we really have to respect this recent move, and, you know, we might even see this resume to the upside. And as I said, 92.60, 92.70, this zone you see here is actually the line in the sun. We've already broken multiple. We said that, you know, between 91.60 and 92.60, we had like a cluster of resistances. The last one is up here. Once we clear that as well, I don't really see something significant up to 95. I don't see any significant area of resistance. I mean, we do have at 94 the 38.2. So next target is more likely than not the 94.2 area. So, you know, it's quite some distance to that. So I would remain very careful, especially just have a look at cable. I mean, cable can't catch a bid, even if it's life dependent on that so far. I mean, we've had like 5 consecutive days to the downside. We then got a very weak reaction for a single day. This is already like what, the 7th, 8th day that we're even considering closing lower. So if we even clear the 200 DMA, I do believe that the next target is the 38.2 from the lows, from that low, which is the post Brexit low. Before we can even consider some kind of rebound. I was looking to short 138, 139, especially if we break lower today towards the 38.2. I think that I will have to revise my target. We would then be looking to find resistance at any rebound towards the 136 to 136.30 area, because it will be less likely that we're going to make it up to 139. At least we might make it up to 137.50 or so, but unlikely that we're going to make it back to 139. So the cable, at least in the short to medium term, doesn't look good at all. I'm looking for opportunities to be short, and same applies. I was talking about that level some time ago, this 119.36 area. It's a confluence. It was a high here, it was a low here, and it's also the 61.8 of the last move, the last leg higher. So if we do break below it, then the next area of support is 100 pips lower, and things will start looking grim for the Euro USD. Okay, so let's have a look at how the bonds are reacting, although more or less we can guess given the fact that there it is. So we are seeing bonds rebounding to the upside, but that's not really a surprise. To be honest, I really believed that we're going to first make it to the 161.8 of this correction. So my ultimate target was the 119, 119.10 area. We almost made it to that, but we didn't quite make it. So now we've penetrated the first area of resistance, which was the previous low at 120.12.13. We can, if we manage to break above it, to close above it, then the next area of resistance at 120.50. And if we start breaking these levels as well, then we might even start considering, the possibility that this was like a wave 4, and that was a final leg to the downside, and then we can be looking perhaps even for a stronger correction to the upside. So I'm with Blake here. I mean, I do see the risks. Blake already mentioned how excessively the market is short bonds, and this might if we squeeze a little bit higher, this might prove to be the required fuel for a bigger or for a more brutal rebound to the upside, in which case, if that gets confirmed, I wouldn't even find it impossible if we made it all the way back to 123.40, which was this double bottom area that this double bottom that was actually created at the very end of 2016 and March 2017. But okay, it's too soon to talk about that. I'm just giving you a potential. We still have the 120.50 area to face, and after that I would be looking for 121.80. Now let's have a look at the bunds. Bunds are also rebounding from a quite a significant area of support. They still they're still confined within. Let me also make a parallel to this one. Something like that. So so far, or you can even draw it like this. So far, not really convinced that the bunds have finally broken the downside. I mean, we did break a very important horizontal area of support, but the price action we've been seeing since points more to some kind of prolonged.
Lost you again, Steve-O. Maybe we should have like elevator music while the Steve
consolidation. So as long as
you're back now, you're back.
Yeah.
Yeah.
Okay. So officially, I have nothing else to try. I've tried every potential, possibility.
I know.
Okay. Okay, next time I'm gonna just do the webinar from my MacBook. I don't know what else to do. Okay, you know, the boons are still within a longer term consolidation. I think there is not much to do here. We are in the middle of it. Definitely though, we rebounded from a nice area of support. I would be looking once again for the 160, 170 area as a potential area of resistance. Okay, let's go ahead and have a look at the euro yen and the euro and the pound yen as well. And there we go, euro yen accelerating to the downside. You remember I was quite clear about it. I believe that if we break below here, and then if we confirm with a break below 131.50, the next target is going to be at 129. So we seem to be accelerating, which is a good sign that we are indeed on our way to 129. And if we do clear 129 as well, I think that the situation becomes a lot worse, because then we have some kind of a topping formation, and I think we can be looking for much lower levels. So 129 the next target, and 129 is going to be extremely critical for this instrument. By the way, an extra comment here, even if you notice that the RSI, the move higher in the RSI was clearly corrective. It's exactly what we want to see in a correction, right? We saw oversold level.
Lost you again, Steve. You're talking about the oversold levels, and then we lost you.
We then saw the.
Okay, you're back again.
Worse. Nice.
Back again. Next time,
so,
yeah.
Uninstalling and reinstalling the program.
Yeah.
Yeah. So uninstalling and reinstalling the program actually made the problem worse. Nice. That's good to know.
Yeah.
Steve, you're the first FX mime I've ever heard, not heard before.
Yeah.
You know what a mime is, right?
Yeah, I do, but I'm not really happy with what's happening, because I've spent hours trying to find what is causing this, and I can't come up with anything. I mean, it works just fine when.
Maybe Jason has played with your headset.
But I mean, during this webinar, I changed the headset. I'm using a second headset. The headset is not the problem. Yeah, but tell me about it. I've tried a billion different things, and I don't seem to be able to replicate offline this problem at all. I don't know what it is. In all honesty, I've run completely out of ideas. Okay, so euro yen, you know, very strong move to the downside. RSI clearly showed a corrective pattern as well. We're breaking lower. If we do break below 129. I think we should be looking at much lower levels, and let's have a look at the pound yen as well. Pound yen currently testing very critical level. You can see it here. This is the confluence of this ascending trend line that passes from almost every single low that we had recently, with the exception of this little area here. And it's also a horizontal area of support resistance. If I zoom out, you can see that that this area has acted as support here, resistance here, resistance here, resistance here, support, 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 and this time we're testing it as support once again, right? Now, if we do break below this level, the next target is at 144.80, and below that, you see what I had drawn back there, this ascending channel, and then if we also break below that, I think the situation becomes quite grim for the pound yen as well. I think it will be targeting much lower levels. So euro yen, pound yen, both of them look quite bearish. I'm still short half of my initial position of the euro yen. Unfortunately, I had made an attempt to be short the pound yen, if you remember, and I got stopped like at the highs when it overshot, but it is what it is. So let me revert to questions and see what's happening there. Actually, let's have a look at the metals first, because I know that people always ask for them. So for the metals, I need to stress out here that it is very important that both silver and gold rebounded from quite important confluence of supports, especially gold had a triple confluence of supports here. It's the 50% fib, the 200 simple daily moving average. It was also horizontal support area and also psychological level. I mean, the 1300 area is a psychological level. So as long as we're holding this, we remain within this consolidation. And in essence, you know, we have no reason to be bearish. We need to remain patient. Same thing with silver, rebounding from important support, remains within a long-term consolidation. So not much to do here yet, but we do have to indicate that the fact that they're holding is definitely something to take notice at. And you know, let's have a brief look at copper. Copper remains in a prolonged consolidation, a slow grind lower. Obviously, there are two possibilities here. Possibility number one, which is the highest probability scenario. You know, we've been in an uptrend since the very first days of 2016. During this uptrend, we had periods that, you know, the metal was more or less consolidating, and periods that it was pushing higher. This is another period of consolidation. So if we do break above this confluence of resistances here, the 61.8 and this descending trend line, roughly at 317, 318, we should be starting another leg to the upside. But there is also one more possible interpretation, which is this one. Let me draw it. Somebody can be seeing here a topping formation, right? Not a pretty one, but a head and shoulders formation. In which case, for this to be triggered, we would need to see a break below 293. So in essence, nothing to do with copper unless it either clears 293 to the downside or it clears 317 to the upside. Let me remember to say here that we're very happy to announce that Joe, Joe is working with us. Those of you that are in the chat room, you know him very, very well. He's a moderator there as well. He's going to be on Bloomberg TV live today at 2:30 Eastern time, 14:30 to be exact, Eastern time. So there's a little segment there for 5 minutes. He's going to be talking about whatever he decides, you know, is interesting to talk about. You know, he's going to choose some kind of currency pair or metal. And, you know, we're very proud and happy to announce that we're definitely going to be watching him. So let's see what kind of questions we have, and let's try to cover them. Good afternoon, bear market rally. Bund went bullish, and not exactly bullish, Kurt. I mean, as I showed, yes, the Bund did find support at a very important support area, but on the other hand, you have to keep in mind that Bund remains, you know, for a prolonged period now within a consolidation. I'm sorry I came in late. Was gold and euro pound covered perhaps? We just covered gold a few minutes ago, but we haven't covered euro pound, so let's have a look at it. Euro pound, you said? Yep, let's go. Euro pound, here it is. Euro pound, we said that clearing the 88 cents level was some kind of a bullish development, but you know, I remain very cautious here simply because euro pound since the middle of September of 2017 has been trapped in this descending channel. We're currently more or less in the middle of it. We're actually testing the 61.8 of the last move lower. So in all honesty, I wouldn't be doing anything about the euro pound here, anything at all. Okay, so I want to make this clear. Personally, I wouldn't be touching it. Let me see. It's most likely, Kerem says it's most likely from GoToWebinar. I do think that this problem is connected to the software, but I don't know in what form, because I'm having every single day meetings on several platforms with sharing screens, etc. I never ever have any problem with my voice going off or whatever. Bob, I have to tell you that my CPU costs more than $1,000, and my CPU utilization never surpasses 18%. While I'm in GoToWebinar, I also have 32 gigabytes of RAM. So trust me, unfortunately, this is not a hardware constraint. I'm telling you, I've tried out everything, and I have a very, very strong PC. and nothing is indicated having to do with resource management that would point to any issue. I mean, I've even tried stress testing my computer while I'm transmitting my screen, etc. There is no problem ever, besides when I'm in GoToWebinar, and that just started 2 weeks ago, and I can't think of anything that has changed since then. It's just a problem that came in randomly, and I've almost tried everything that we could think. Okay, any more questions? No, I know. Thank you, Bob. Thank you. And you know something, I'm open to ideas, but I'm telling you in advance, since we've tried anything that can come to mind, try suggesting things out of the ordinary, because we've really run out of ideas. I mean, we spent hours trying to troubleshoot it offline with Velu. Velu is working for us. He's doing he's doing anything that has to do with digital marketing and video editing, etc. Pound Aussie and pound Kiwi. Let's go. Okay, pound Aussie, I said it yesterday. The fact that it broke below this ranges bottom is definitely a short-term bearish development. I said that I'm looking for 61.8 perhaps to be tested, because it was also a high here and a high there. Let me draw it. You can see more or less you can consider this a support zone. So we tested the upper part of the support zone earlier today. If we do break below that, the next area of support I'm going to be monitoring for is the 176.50 to 176.60. Now, having to do with pound Kiwi, yesterday actually closed below this ascending trend line. If we do confirm a break below it, I think that's quite a bearish development. The next area of support is down at 190.50. Okay, a break below 190.50 makes things quite, quite more bearish, because then we are.
Yeah, we lost you again, Steve.
I will be monitoring at this confluence. Okay, Stel, just tell me when I'm back.
Yeah.
Okay, thanks. Okay, actually, after uninstalling, it seems that the problem becomes more frequently, but it lasts for less. So it's a strange change of behavior, whatever.
Yeah.
Okay, so yeah, as I was saying, next target for the for the pound Kiwi, 190.50. Below that, 186, and 186 is a very, very critical level. So in the short term, those two remain bearish, but not yet bearish in the medium to long term. Now, Euro Aussie. We were saying that there are two probabilities about Euro Aussie. One of them, which is the most bullish one, is this being a triangle. In this case, we're currently testing actually confluence of supports. It's the triangle support. It's also this little horizontal support resistance area. If we do push higher from here, everything is fine. We might be pushing back towards the 161 target. And it remains bullish. Now, if we do break below this, then I would be looking for the 155.90 area to act as support. But there is still a possible scenario that Euro Aussie remains bullish. We're going to know very soon. Now, having to do with Euro Kiwi, we were talking about this yesterday. Perhaps there is one more leg missing to the downside. We saw one move to the downside here. We're seeing like a choppy consolidation to the upside from here. So there is the possibility that there is one leg missing to the downside before resuming an uptrend, right? Anyhow, in the short term, as long as we remain below this 78.6 area, let's call it at 172.70, I think that the chances for a move to the downside are slightly higher than a resumption to the upside. Okay, but regardless, for the time being, we have no reason to be viewing these moves lower in the Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi as medium to long-term bearish ones. They might simply be corrective moves to the downside. Okay, so thank you very much. Have a lovely weekend. We're going to be on the chat room. Coach, you have an interview, right?
Yes, Steve.
Okay, is your guest here?
Yeah, he's here.
Okay, enjoy.
Okay, have a great weekend, Steve. Thank you.
Thank you. You too.
Okay, banker, I'm going to make you the presenter. Welcome to our community. Everyone that loves crypto, let's hear about the banker's crypto journey. There you go, buddy. Waiting to hear your voice.
Can you hear me, Dale?
Got you, banker.
Hey, how's it going?
Why do people in the crypto world favor anonymity more than any other group of people that I've interviewed? And I've interviewed people from all different asset classes, that they just want to hide in their closets and make money.
Well, I tell you, one of the reasons why we're creating the Star Wars cryptocurrency, and the banker is just I would say more of an alter ego than anything. As Star Wars is a mythological thing, why don't we make the actual person that's in charge of the launching of the Star Wars cryptocurrency and make that person a fictional character as well? And so that's kind of the start of things. But you are right. There is a lot of anonymity out there in the crypto world, and we have things like one of the things that I've been real concerned about and watching as of late was the whole BitConnect scandal. I don't know if you're familiar with, if your listeners are familiar with BitConnect, but BitConnect was a lending platform in the crypto world that was reeling in people and using their investments and all of that stuff to, basically switch Bitcoin, BTC, to their BCC platform. Went all the way up to about $450 a coin, and then it just fell off the face of the planet. And right now, I believe it's worth a little bit over 10 cents per Bitcoin, or per BitConnect coin. So people lost a lot of money.
A lot of fraud out there. So how do you do your due diligence to know whether these ICOs are for real or not? In the stock market, a lot has to do with management. So do you have to know the people behind it?
Well, one of the big things is making sure that the coin itself, or the token itself, is compliant, and that the Security Exchange Commission is following it and making sure that it can be considered as a commodity or a currency. And one of the big things that we are trying to pattern the Star Wars cryptocurrency after is the AML Bitcoin. And AML Bitcoin was supposed to launch on HitBTC, which is one of the Bitcoin exchanges here, and it was supposed to launch here in March as basically the Tether of Bitcoin. If you're familiar with Tether, Tether is this particular coin that is always stating that it's will always be worth at least $1. It'll never go below that. So it's saying that it follows the US dollar, and then it will always stay in range with that. Well, AML is supposed to do second thing better there. It's supposed to not only...
That stand for anti-money laundering?
Correct. Yep, anti-money laundering Bitcoin. And what that is also KYC compliant, which is know your customer, and it's also biometric. And so it's all included within the code of the actual coin, the algorithm, the computer program itself is all in that. Actually, it's being tested right now with the San Francisco Port Authority, and what they're using is they want to do this as a means of exchange with other nations such as China, Japan, and such that are really taking off in the whole crypto world. I mean, as far as the United States is concerned, we're kind of, I would say, a little bit behind. And I think one of the reasons why Bitcoin has taken such a big tumble over the last, I mean, pretty much since December, we've seen Bitcoin kind of go up and down. And since you and I have been talking, we have seen Bitcoin go from, probably the high 15,000s to where it is right now at about 9,800. And I believe we are going to see this we're going to see Bitcoin take a pretty good fall again. And I think we're in a bear market. A lot of Ethereum, which is the basically the next step. It was built on the Bitcoin platform. I think what we're going to see is what they call the flippage, and basically what that is we're going to see the market share be taken over a little bit more by Ethereum than it is Bitcoin. I have seen shorts at Bitcoin at $2.99 for August. $2.99. That's what they're talking as a possible.
You mean there are puts, or what do you mean?
No. Well, I mean, there's puts.
They're looking for $3 Bitcoin.
Yeah, $3 Bitcoins. And that I saw that put early in January, and I was like, that sounds very interesting. And now that we're seeing the Dow is looking a little interesting, I would say, as far as the charts are setting up. I think the Dow could even dip down even further down to 21, 22 before it rallies all the way up into the 30s again.
Okay, so you are a believer in the correlation of animal spirits in things like Bitcoin and the stock market moving together?
Yeah. Oh, yeah. I think Bitcoin's more in line with the S&P. Now, here's the thing: can cryptocurrency take over? Can it really pull the market up? And I believe that yes, it can, because here we have a speculative asset that is, right now we're saying this particular asset's worth $9,800. Well, that's interesting. But when you look at the stock market, here is BTC right here. This is the Bitcoin. This is basically the blockchain. This is the oldest blockchain company there is out there. We're looking at this company. It's been around for a good 8 years, and it's been following Bitcoin. This thing has not pulled out of the 8-cent range forever. I have been watching this. I've been with BTCS for about 5 years on the stock market, and I saw it rally this year up to about 40, 50 cents, but it's been sitting at this. This is where I think Bitcoin should be more at. I think we should see Bitcoin more at this range than where it's at, is at the $9,000 range. However, AML, which is this particular built on the platform of Bitcoin, I could see that this could go anywhere, following at the same rate of where Bitcoin is right now, just by the technology that's behind it. Because Bitcoin really has no technology. It's just a basic algorithm. It was written by Satoshi Nakamoto, who also has said that the Bitcoin itself should be available, or enough Bitcoin should be out there until 2147. That's a long time from now. And there is a limited amount of supply. However, we're now seeing how many altcoins showing up on the market that are built upon the Bitcoin platform or the Ethereum platform. We're looking at so many that are out there. Since January alone, there have been over 150 different cryptocurrencies that have been made. The one thing that we want to do to stand out above the rest is we're not trying to create a cryptocurrency. We're trying to create more of a tradable commodity that can be used not only for fans' merchandise, but everything up from the web all the way down to the Comic-Cons. That is what we want to create, and then we also can be used in now the new Disney Galaxy's Edge that's opening at Disneyland. We'd like to somehow incorporate Jed Cred, which is the Jedi Credit. JedCred.io is our website. We want to include that into what's happening with Disney and this whole new push with Star Wars. And you know, not only do we want to create a cryptocurrency that's made by fans for the fans, we really want to have something that stands out above all the other cryptocurrencies that are out there that seem like some that are, you know, quite scammy.
Okay, so where are you in your process?
Yes, right now what we're looking at is you know, as we're putting together a white paper. As I said, right now I've been dealing with I had some kind of health problems in the early part of this year that I've been dealing with, and the white papers are getting put together. We're ready to put together some patents as well. However, the one thing that we're kind of waiting on is this AML listing. And once AML gets listed, we have a better understanding of where we can be. And because we want to create a currency that will follow along the dollar as well. And that will also increase in value and not be so volatile as well. And that's the other thing, you know, can Bitcoin itself become less volatile? And that could be one of the reasons why we're seeing Bitcoin kind of go at it sideways. It's going pretty much sideways right now, is maybe the volatility itself is lessening, and that could be a positive thing for Bitcoin as well. We really don't know what's happening right now with BTC.
Okay, so you're looking for a bear market. Are you looking to exploit it by taking any kind of bearish bets on any of these cryptos?
Well, no. One of the things that we really want, one of the things that I think is, and this is where I say I believe that Bitcoin may be bearish. However, I do not believe that Ethereum is going to be bearish. We've now, if kind of pulled up Ethereum right here, as we can see right here, we're starting to see a good rounded bottom right here, or it could be the form of a cup and handle. But we have seen this take place before, as you and I have been talking about it over the last month. I thought that we were seeing a good solid cup and handle being made. Well, here is a stock called SSC, and SSC is 7 Stars Cloud. This is a Chinese crypto currency type exchange that is out there. Has that been bought out, or not been bought out, but it has deals with Disney, has deals with several of the entertainment industries, and they just launched this sports gambling crypto platform for the SSC. Well, this particular stock I thought was forming a very nice cup and handle. Well, it definitely broke, and it's now, I think, in a very bearish market. One of the things that we have seen here is that you just don't know what's happening. It's just such a volatile market right now. And until August, maybe September, we really can't, I don't think we're going to see any pull up, maybe we might see it go past 11,000 for BTC, probably Ethereum, we're probably going to see it up towards 1,200 again, but I think we're going to see a pullback again at the end of July. And then we're probably going to be a bear market until September, until it blitzes up again. And that's kind of been the trend for, gosh, probably a good 2 years, 3 years, where we've seen August we see an uptick in August, and then we see this downtick, and then we see a push up in November and December, and that's just kind of been a trend. But one of the other things that I think is we're going to see, if for one instance that Bitcoin does explode, and there are some signs that the cryptocurrency could explode, and John McAfee says, oh gosh, we could see $500,000 Bitcoin, or we could it's just ridiculous amounts. Well, there is true that is a possibility that could happen, but we're also going to see here's an example for a cryptocurrency.
I wanted to ask you, Banker.
Yes.
I wanted to ask you a question so it doesn't turn quite into a monologue. I heard a story that a lot of people believe Monero gives you anonymity, and I heard a story about a guy who sold his Monero, and when he got to this country, they knew all about it and did an audit on him. So are a lot of people buying these cryptocurrencies thinking they have anonymity and they really don't?
And that's the thing, you know, we are living in the technology world, and Monero is supposed to be the most secure and the most anonymous, and that's why we're seeing kind of a surge in Monero, and not really much of a surge. I think Monero is maybe at like $1 or something. Take a look at where Monero is right now. Let's look at the capitalization. Let's see, Monero, 247 is for Monero right now. That is down from, I think it was at its high at 400. Let's take a look at where it was. I don't believe that anything is anonymous. We are now seeing that, and what is built into these algorithms, and this is the scary thing. There was a big push a few months ago where, blockchain itself had a bug that they're saying that there was pornographic images in the blockchain that were associated to child pornography, and that these are images that are inside the blockchain. So even anybody holding that particular Bitcoin could be charged with a crime because they actually are holding something that has some sort of illegal substance built into the blockchain. These are very, very serious bugs that are within the blockchain. And when you ask me, could there be a possibility that the anonymity is really not anonymous? Well, that's possibly true, because every single signature that's connected to that particular blockchain is connected to somebody, and that can be traced, Monero or not.
Okay. So how do you want to wrap this today?
Well, one of the things that I wanted to thank you for allowing me to come on today and talk a little bit about what we're, and we've got the market opening up here. One of the things that I really wanted to say is, our investments that we're working on, we sold out of all of our positions the other day, but now we're back in. But we're back in looking at the energy and also the water purification side of things, because of course one of the things that are stocks that we are most focused on, not only crypto but the REIT and pot industry as well. And one of the things that's really started to take off right now is the water purification industry. And so I'd say, keep an eye on that industry, and keep an eye on some things that are outside of tech to really push your stocks forward and your investments forward.
Okay, and the best way for people to get in touch with you anonymously would be what? Twitter?
Actually, no. That you can email me. I'll give you guys my name. It's no problem. It's Don Adams. That's DONADAMS at JEDCred. That's JEDCRED.io. Again, that's Don Adams at JEDCred.io. And I'm Don Adams, and the banker. You can call me, whatever you'd like to, and we'd love to talk to some people, because we really would like to create a good team on this as well.
Okay, Don, and I'm looking forward to your ICO coming out, because if Elon Musk survives and we do get to Mars, I believe that we'll be able to use your Star Wars currency anywhere in the cosmos.
I think it would be just fun to have, wouldn't it? It's an interesting concept, and I think it's just something fun that we can kind of look outside the box of this anonymity and just have some fun with crypto again, because that's what it's all about. This is what stocks and trading and all this is all about. It's not just about making the money; it's also about having fun.
Yeah. So, in talk about having fun, I'm going to get some and try and pay a bar tab with it.
Hey, that'd be cool. Say I got some Star Wars crypto. What a great way to start a conversation.
Okay, and someone's requesting your Twitter handle.
Oh yes, it's at Galactic Credits, and you can just find me at Galactic Credits. So that's Galactic Credits with an S at the end. You can find me on there, real easy.
Okay, Don, have a great weekend. Thank you so much for coming on.
Thank you, Dale, for having me on. I appreciate it. God bless you.
Views and your bearish stance on crypto into the fall. So thank you very much.
Thank you, brother.
All right.
Have a great day. All right, God bless.
Thank you. And
All right,
that's
bye-bye.
it for us. That's it for us, Face. Have a great weekend. Do your work and get ready for next week, or I'll see you in the private chat. And remember, don't just count your pips, count your blessings. See everyone on Monday. Adios.